and let's get ready. Getting started in 60 seconds. What's good? What's good? Hope you do well, Stingray. Good to see you, Nani. If you're here live, thank you. Let's get cracking. Let's go, let's go, let's go. Good morning, good afternoon, good evening. We are starting here with another week of Trading with Aussie. Thank you for being live with me. If you're here, I really do appreciate your time as always. Always, never taking it for granted. Never, never. Always grateful to have you guys live. And if you're watching the recording, thank you as well. Just make sure to drop a comment down below. Let's get stuck into it. First of all, we always start with our friend, a dollar. The DXY, we talked about it for quite a bit, has already taken downside liquidity. We saw down here. So the next logical point to go for the dollar, and we've been literally talking about it since a couple of weeks now. So I may sound like a little bit of a broken record, but these things do take time. You can see the little magnet here, or big magnet. It's the upside liquidity. Okay, so dollar is definitely going to come up here into this weekly candle. If we do change time into the weekly, you will see that we have a very dominant candle right here. This is a very important candle that we'll likely get and see retested. And then obviously we'll have to see if we continue lower or if we perhaps go even higher into some of these levels. I personally think this is going to be an unlikely scenario. I do think the dollar is going to reverse lower, and this is going to be the inflection point effectively that's going to push us lower, but we'll see. We don't like to predict the market. There's always a possibility that these levels eventually are going to get filled, right? It doesn't need to be in the coming weeks. It can be in the coming months, years, however long these things, like I said, do take time. So for now, though, the next immediate level that we're going to be watching is the 100, which is obviously a very important psychological level for the dollar in terms of potential reversal. So a big week spike up into the just above the 100, and a big pushback would not surprise us. We know what's coming. Okay, so keeping an eye on it. Obviously, with the dollar going up, we will likely see what going down? Assets, right? Things like gold, things like silver, things like anything, basically anything that stores value. Anything that stores value, right, could potentially go a little bit lower. This is not necessarily always immediately the case. It used to be a lot more correlated, but it is, as a rule of thumb, something that we keep an eye on, because basically, if the dollar is going up, it means that the value is coming into the dollar. When the dollar goes down, value is exiting the dollar and is going into store of value. So all these other things like gold, BTC are gonna go up. So we do really want to see this dollar reverting here for our bags, and for other obviously reasons. Like we want to see gold, silver keep going up. Obviously, if you didn't buy, you may want to have a retracement, but we know that in GTG we've been catching some pretty good entries that lined up. So BTC Dominance has been teetering here. We talked about, I think, last week, why the importance of having a decisive close here. You can see we did close below, but that was not a decisive close. This was a very weak close below. And I do forecast, given this very weak attempt to potentially come back into the higher range. You can see this is a range, it's like a box, right? So higher part of the range, retest, maybe even take some of this out, spike above, and then potentially we come back into the range. So a little bit of sideways action here for the BTC Dominance, in my opinion. Which will likely, put our alts or give us, if you look at the positive side of things, this will give us a bit more time to accumulate any of the alts that we are interested in at the lows. Total tree paints a very similar picture, where we have been teetering around that area. So from the lows to the highs, we missed the 76 retracement by touch, but not much. But we did come back into a very nice weekly candle. Let me show you here. Change the time frame. You can see this 2 weeks order block. So an order block in this case is two different candles, right? It's a one move. It's a sell to buy. In fact, we can probably change it to 2 weeks so it's easier. You can see 2 weeks sell to buy move. We tapped into. Now this was not a very let me ask in the chat, is this a strong mitigation of this candle? Would you consider this candle completely mitigated? Yes or no in the chat. This little tap into this 2-week candle is this candle. That's right. It's not really mitigated. That's right, T-Bone. This is a very weak mitigation. We like to see price action coming deeper into that is exactly the right answer, Pat. Not even 50%. So we want to see price action coming deeper into this level and mitigating any of the orders potentially. This is valid for any asset. In this case, we're looking at total market, but a chart is a chart. So when you see these kind of mitigations, just be aware that this candle is not mitigated still. Okay, so this is a very, very weak mitigation. I do expect price to continue lower and come deeper into this into the money, into this area of liquidity, because this is all it is really. It's orders, right? And orders are what? Orders are liquidity. So I do eventually expect this flag, I think this is bearish flag if you look at it that way, to break lower and then potentially continuing, hopefully coming back in the 76 AA6 and move higher. Okay, so keep an eye out. I don't expect to see a massive pump from here, and if we do see a bit of a relief, this is the flag. Just be mindful, we will likely short again from a higher standpoint, which of course, this is the chart that tells you every single crypto project excluding BTC and Ethereum. Okay, so this is very important chart for alts. So very, very good to always keep an eye on total trade if you are invested into some alts. Let's take a look at Bitcoin. So Bitcoin, at the moment, I am in a long. I was in a long down here. I didn't call this one out because it was taken market at market. But as of what is that? An hour, 2 hours ago, I am looking at. I'm in this short. It's a quick scalp, very quick scalp. I don't necessarily want to call this out because, in my opinion, we are going to go higher. So this is the scalp against the trend, and I'll show you what I mean. So we are obviously in a macro bearish environment, right? We are making lower lows, lower highs. Eventually we stop, we stall, we close above. Now, as you can probably see from my little squiggles down here, and let me take it on the hourly so you can see. Now we have changed the structure. Actually, let's go 4 hour, daily into 4 hour. We have stopped making lower lows, and we have started making what? High highs and higher lows. So the market sentiment or the market structure has started to shift on the lower time frame. Does this mean that the daily and the weekly are all of a sudden bullish? No, it doesn't, because the macro is still bearish. But doesn't mean that we can't necessarily play shorter time frames, longs, right? This is likely going to push back into this new range, because this is the last important high and this is the last important low. And if we have a last important high and a last important low, that means that now we have a what? We have a trading range. Okay, so this is our new trading, macro trading range, high to the low. And if we are looking here, would you guys and girls agree that we're sitting more towards the bottom of the range, which is why I took this long down here the other day? But if you're looking at it reverse, so we want to effectively keep short in this chart because on the macro we are bearish, we want to see price where? At the bottom or at the top? Where do we like to short? We like to short from the top, right? Hopefully, yeah, that's right. We want to short when we are at a premium. And you guys and girls know now that I personally don't do 50 cent 618s. That is exactly right. Pad 786 at A6 areas are there as a best possible risk to reward. Okay. And you can see now that if we go into this new range, we have a new range here. Round about the 786, we have this very weak doji, which is a buy to sell move. Not very nice there, but this is a nice area to keep an eye out, because remember, Fibonacci's are just areas. We don't trade purely just because something is at the 76. We need to see what's around it, right? So what we have around here in this confluence area, we have a fair value gap right here. You can see from there to there, that week, big push down. We have a buy to sell move, which is not an institutional candle, but it is an area of interest. So I am going to highlight it. And then we can simply scale down in time frame and have a look at what potentially lower time frame can give us. Nothing too pretty on the 4 hour. 1 hour does have a very nice candle, which is the last push up that grabs liquidity. But can anybody in the chat tell me what is the issue with this candle? Why would I want to play off of this candle again? Anybody in the chat? That is Pat coming in with the heat today. That this order block, which was a valid institutional candle, last big push up, in other words, buy to sell, because after that we had displacement and price continues down lower. This candle has been mitigated, meaning that at some point shortly after, there's another candle, in this case this week, which trades well into it. Okay, so this is not a candle that I will want to play off of it again, but perhaps I can go and have a look what's happening in this candle. Let's have a look what's happening this week. Oh, sorry, when I do this, I usually have my visibility turned off because otherwise there's too much noise. Let's have a look what that wick, which is our new orange box, show us. Oh, that's interesting. Look at that. What do we have here? This is a nice sort of block to play off, right? 15 minutes. Can you guys see it? Is everybody following the process? How we found a potential entry, yeah? So this was this is the 1 hour candle that got traded into it, right? This was the 1 hour, and you can see that this order block trades into the previous 1 hour candle. But this candle itself gets mitigated by this candle. And now we have a new candle, which doesn't get traded into. So this, you can do from the body if you want. If you want to be a bit more conservative, you can do from the wick. This can be a nice entry, okay? And then all we have to do is go back into the hourly, 4 hour. And now we have an entry, which is inside that daily order block, which was the last push up before the sell. And all of a sudden, we can look for shorts when we come back up here, all right, which is going to be sometimes. But I'm not going to try to short below that point, and the short will probably look something like this, right? And then we'll continue shorter. We'll continue lower. If you do want to have, obviously a bit more room, you can. I like to put my stop losses above the AA6. So something like this will be a nice trade. Scaling down in time frame to find more precise entry using liquidity. Would you still place limit entries at an entry like that one, or do you rather place an alert and see what happens? That is a great question from Pat in the chat. I personally like to place a limit on this because I've already established it. That this candle happened a month and a half ago. So I know that area eventually is going to get tapped. But also, there's another layer to that. I like to place a limit because I only trade about an hour a day. So in reality, if you do this full time and you are, yeah, that's right. Those sniper entries are hard to catch live too. That's correct. But in reality, what I was going to say is that if you are a full-time trader, like I know a lot of people are in this group, and you use trading as your job, as your main career, then a market entry will make more sense because you have more accurate data feed, right? Because you will wait. What you will wait here is for price to come up here. Then on lower time frame, you wait for what? you wait for the change of character, break of structure, and confirmations. So this will be a better entry model, right? Because you wait for the market to confirm to you that there is a change of character, that there is a break of structure on the downside, and then you take the best possible entry, or not best possible entry, but the most probable entry, okay? For me, I'm not full-time. I have a full-time as a dev. That's my job. So I'm gonna happily and comfortably set a limit, and that's fine, because I know that my risk is predetermined. If I'm trading at 1% risk, I know that this trade is going to cost me 1%. I already know how much I'm paying the market to take this trade. So I'm not stressed. If it hits, great. And if he stops me out, well, I knew how much I paid. Another question that you can ask after that is that, would you then re-enter if we go, if you get stopped out? That is where I would want to not set a limit, but rather take a look at, price action. Because if we continue making higher highs on a lower time frame, I'm not going to re-enter. But if on the lower time frame, we go up above and I do get stopped out and we are slightly above the AS6, and all of a sudden the lower time frame starts to break down, then yes, I will re-enter, because the idea is still there. Does it answer your question, Pat? I hope it does. So this will be my my area to short, okay, BTC. But it is quite a long while away, isn't it? It is, because we are sitting at 69 and this is at 89. So it is a very big gap. So if I do have a bias that eventually we will come back up here potentially, and I can see that on the more immediate price action, lower time frame has already started shifting towards the upside, I can play that, this reversal. I can play this retracement, because my bias on the macro is still bearish, but all of a sudden on the lower time frame, which is for me is 4 hour, 1 hour, I can still catch some longs. So hopefully this clarifies a little bit the concept behind scaling down in time frame, using your macro bias to determine where we are. Yeah, particularly since the non-full-time traders may not ask this type of questions. Useful to hear the mindset from both perspectives, for sure. Thank you for noticing, T-Bone. Thank you. It is a very important piece of the puzzle, especially with mentorship as well. How do you enter trade? How do you exit a trade? And I'll say this live, and some of my students already know this. When you're trading for a long time and you find an edge, finding the entries is easy. That's the easy part. Okay, finding the entries when you do it for a long time and you have found the system becomes so easy that you just log in 10-15 minutes. That's why I trade 1 hour a day. I log in, look for an entry. Is it there? Yes or no? Boom. If it's there, I'll take it. If it's not, move on. The hard part of trading, which takes years and years and years to master, is going to be managing the trade. Okay, and the hard part of trading is going to be playing multiple trades like we are now, like basically what I just show you guys and girls. So going up, we can still catch an up move. All these up and downs. You know what I mean? It's the hard part, okay? And you don't want to be caught over trading, and you don't want to be caught, oversizing, over risking, over leveraging, and all these things. So back to BTC. This is going to be my main area to short, because overall we've got a macro bearish bias. But now I am in this long down here and in this long up here, and also I'm in this macro short, because I know what price is likely going to do, right? So you can see I took some profit here, so which was here, and this is where I'm going to close my short, and I can start looking for longs again. You'll likely see me. I could probably just do this so we don't get confused. You'll likely see me calling some longs again. Oops. Once we come back, I'm going to try to hide this, otherwise they'll confuse you. Once we come back into this 4-hour order block, or somewhere here, because now we have a new structure. We're obviously making lows highs, higher lows. We're likely gonna go making higher highs. So, but before we do that, I want to see price coming back. So I don't want to be or to get caught into the middle of a range, which is where we are. This is the last high. This is the last low. We are sitting spank in the middle. All right. So for a nice big long swing, I need to be at the bottom of the new range. Exactly what we just did on the daily. This is the range. High, low. We are sitting in the middle of this imaginary box. So let price do what it needs to do and then come back, and then we can look for that long. Okay, so this is going to have to take a little bit of patience. And I don't want to call all of these trades because this is where people that, especially to Pat's point, that don't trade full time tend to over leverage. Best practice for 2 to 3 trades, excuse me, open at once, no more. Okay, that's best practice, unless you do that full time, of course, and you're a professional. So this is Bitcoin for me. Just gonna have to play basically a bit of patience, and I want to see us coming back into this 4-hour order block or somewhere around there to then catch the long again. Okay, so I am interested in longs, even though the macro is at the moment obviously still bearish. Ethereum, this was the squiggle from start of February, 10th of February. Hang on. I got the exact same short. This literally exact same HTTP. Do you still consider this 4-hour order block even if it has been mitigated? Would you want to scale down in time frames? Are you talking about Bitcoin? 4-hour order block was indeed mitigated, but look what. Yes, BTC. I'll show you something. Good question though. Go away. There. We have a daily order block here, and that 4-hour order block lives inside that daily. So this is a very important area where higher time frame that did not get mitigated, left behind the fair value gap. Yeah. So this area is still very much important for me. Hasn't been mitigated yet. We'll likely see price come back eventually down here. What's happening here? Yeah. Does it make sense? Does it answer your question? Hopefully that's, yeah, we're inside the daily. Yeah, got it. So yes, this is the price action that we discussed back on the 11th of February. We said Ethereum is likely going to move sideways here for a while, and that's exactly what it's doing, right? So it's literally just zigzagging, nothing new there, but it's very similar to Bitcoin, of course, which is why we always start from Bitcoin. We have what, even on the daily is a bit clearer. We have started shifting our character, so we likely see new highs and higher lows. Okay, so we likely see this kind of price action from Ethereum as well. Ethereum has a very nice order block right here, which is pretty much the same that we looked at BTC. This one right here, where I'll be interested at longs once again. And you can see this nice order block, takes previous liquidity, followed by displacement. And then we can obviously look at lower time frame, has very nice 4-hour order block right here. Oops, sorry, that was the wrong one. That was 5 minutes, so it goes away. Let's see, 1 hour. Nice candle, nothing too fancy though. Ugly, didn't want to take it. That's a nice 30 minutes order block right here. I'll take this one. This is nice. There. This is an entry. And this is where Ethereum would play off for me. So I will wait for Ethereum, come back into this level, stop loss below that one, and then we'll likely see price action coming back higher, maybe into some of these fair value gaps. Can be a little bit more generous here if you want. Crypto is very volatile. But yeah, does it make sense how we find these entries? And yes, Pat, you're spot on. So what Pat is saying in the chat, for those of you watching the recording, is that ETH long looks cleaner than the BTC, and it is. It is because that 4-hour block, which we just looked into BTC, this one, it hasn't even been mitigated. So this one is a cleaner entry. Okay, so Ethereum or BTC, depends what you're trading. You know, if you're trading BTC or ETH, or you can, I definitely wouldn't want to take both, because then you're doubling your risk for the same exposure, which is crypto effectively. So take one. I would like, once we get done there, I would like Ethereum better. So usually this is what I do. Set an alert. Ooh. Oh, they've changed. Oh, interesting. They changed alerts. I haven't seen this yet. Message, trade area active there. New alerts. That's right. Yes, that is correct. What you're saying in the chat. XRP, we had this entry set up down here, never hit. So probably happy to delete this now. Market did retrace and took this previous trend line. So since we have already 2 entries marked up, one for BTC and one for Ethereum for lower, I'm not going to overexpose myself and look for XRP as well. But overall, I am feeling more confident when I'm looking at different assets that would likely in the shorter term go higher. You can see XRP is a great example, taking downside liquidity, and then we will likely see a retest of this daily order block right here. This one is actually closer than the others, and then potentially move higher. If you did want to take XRP or instead of ETC and BTC, this will be the same daily order block that we looked at. Okay, so this one is a little bit closer, and we'll do the same. This 4-hour order block does not take liquidity, so I don't like it. Don't like it. Don't like it. Everything's mitigated. And maybe this one. This will be my entry because that's mitigated. This is the 30 minutes. And I will probably enter somewhere there if I was to take XRP, which hands up, roughly in the same spot as the others. Okay, so the problem with XRP is that it wicks like a maniac. It's like squirrel on Adderall. See? So it does, you have to be a bit more generous. And this is where knowing your assets that you trade pays dividends, right? That. So something like this will be my entry for boom. Yeah, they changed alerts 3 days ago. Yeah, don't know. I didn't notice that. So this will be my XRP trade. Solana, similar to everything else, of course. So you know the drill now. If you want to look for longs, this is the order block, and you know, scale down. This is a nice clean 4-hour candle. This is it does get traded into it, but not a lot. So 4-hour. Oops. Hopefully, by looking and just looking at the process itself, it helps you guys and girls to understand how we find entries. Yeah, so hopefully I'm doing this process, which is boring, but this is how you find the entries. This is exactly how you should be looking for entries. High time frame into lower time frame. Start with a very high time frame like a daily, or sometimes even 3 days and weekly, and then you scale down. You scale down in time frame. Am I in a zone? Fib zone? Yes, the 76 has got tapped already. This will be my entry for Solana. Okay, so something like this. Tau long, we're still going. Nothing. This is gonna take some time. It's a swing, right? We can literally just be consolidating here for a while, so nothing new there. And that's pretty much it for the crypto side of things. Yeah, we got potentially 4 setups. Please do take only one. Don't take 4 of them. Don't take 2 of them. Just take one. Just choose the one that makes the most sense for you. That you like the better, that you like best. Sorry. And then yeah, just take it. Set up some limits. BTC is probably the one that's got a bit more to go in terms of being down there. Ethereum is not too far. It's still Ethereum has been outperforming slightly the other 3. So you can see it's a little bit higher, so it's got a bit more to drop. XRP is very close to potentially an entry. And Solana is also relatively, it's probably, yeah, kind of similar to Ethereum actually. Somewhere there, but this would be the daily. Seeing you doing the process makes me realize that similar I'm trading. I've learned more things myself, but somehow it's so similar, giving some good confidence. All good, man. This is what we do. This is what we do. Stocks, just a quick stock pulse. Nothing new. We've called out some stocks already, and if you did follow the calls, you should be very much up. Like I'm talking a lot. Rivian did exactly what we squiggled back in February, early Feb. So explosion, retest. So we are up. We're up on Rivian. Moderna, if you took it down here with us at $23, $24, we touched $56 the other day, literally early on the week. So we're up 148% on Moderna. HIMS, 7 days, 77%. How's that for a return? 77% in 7 days. I think if you told anyone in that's trading stock that we catching 77% in 7 days on some stocks, they'll be, what are you guys doing in there? What are you eating for breakfast? This is going to be the next one for me. I've already called it out, so I've already entered. You can see $4.88 was my entry. It's on the channel. This is playing in the health space. So LifeVantage Corporation. It's an OG company. They've been around for a long time. They've been around since 1996. So this is how the chart moves. You can see big explosion, retracement, slow down, and then this is what I really like. Look how long you consolidated here before it moved up, and now we're back into below the AA6, and nicely, what do we have? We have a very, very big volume coming just here at the very lows. And if you look, all this volume came into this candle. So now I am expecting personally to see some big move up. We're sitting at $4. We were sitting at $4.88. We're now sitting at 5 and change. I'll probably take some profit around the 15. So that will give us roughly a just over a 3x. Yeah, 3 point something x. And then we'll see how we look. See how we go. I'll probably exit most of my position at these highs, and then maybe keep a bit of a run out when we get up there. So that is LFVN, which is LifeVantage. And Klarna. So Klarna, someone in the chat the other day, I can't remember who was, please forgive me. When I called HIMS, I also called Klarna. They took Klarna instead, and they say, oh man, I took Klarna instead. Well, fear not, you're still up, my friend. You're still up. We called it at exactly $13.53, and yesterday we reached here, so we're up 25% in a few days. So once again, there's smart where you put your 401s and where you put, if someone told you that you can make 25% a year in a year, you'll be happy, right? Your bank pays you maybe 5%, 6% on your return. We're making 25% in a week. We can't really complain. But the thesis is very much the same, right? You can see we're at the low. For me, take profit in Klarna. It is going to be roughly coming back into the $30, so 2x, and then we'll have to play and see how this company goes longer term, because they're only just entered here. So, but this is obviously very much something that I believe in terms of, you know, payment, process payment, crypto. They're doing all sorts of Klarna. You can see like there's a lot AI shopping agents. This plays very much in the AI space. They're doing a lot of code optimization in the backends to integrate AI agents, you know, paying fors and afterpays and all those things. So yeah, definitely bullish on the concept long term. Okay, hopefully this was a good session for you. What broker do you use to trade stocks? I'll share that. I'll share it in the chat later. Pat, I'll use Webull, and I use mostly Webull and then eToro for some stocks, for some ETFs actually. Do you take 1% of risk on stock trades like this? No, I have a slightly different approach in stocks. My stocks are all long-term plays, so I am not interested in, quick scalps. Sometimes I do options, but pretty much unless I tell you or unless I say that I'm doing an option, all these stocks are spot in the sense that I buy and then I hold. Yes, it is bigger risk. Exactly. Yeah. So I'm basically deploying liquidity into the market, and then I just watch capital grow because it is lower risk for me. It plays off over such a long time period that I can kind of exit it, and I'm happy to just take out. Like for example, here in Moderna, if we enter in November, it is now March. In 3 months, we 2.5x our investment. I'm taking some out already. So I'm paying myself some, right? De-risking. So if I put on, say, $100 and my $100 all of a sudden is $300, it's almost 3x, it's $275. I am gonna pay me back at least $100, which is what I put in, and then I'll let the rest grow. Okay, and then all of a sudden that $100 that I have back, I can do what? I can invest it somewhere else. Does it make sense? Yeah, yeah, that's right. Cool. That is it, fam. Unless you have any questions, I think we covered quite a bit. Pleasure. And awesome. Well, it's all recorded, so we can go back and re-watch it if you need to. I feel like it was a good session today with the entry model, and yeah, having a bit of a look as to how we do things. Pleasure, Stingray. Always good to see you, my friend. And we shall see you guys and girls soon next week for another session. In the meantime, have a great weekend, everybody, and I'll see you guys next week. Bye.